Welcome everyone, and thank you so much for joining us today. My name is Susan Welton, Product Marketing Manager at Proficient, and I'm excited to be moderating today's webinar, Strategic Modeling Live, Defined, Discussed, and Demonstrated. Time permitting, we will have a Q&A session at the end of today's event, so please type your questions into the chat box that you should see located in the lower right-hand corner of your screen. And feel free to do that at any point in time throughout today's webinar. I know that questions might very well arise when you are watching the demo and you don't want to forget those questions. So again, feel free to do that at any point in time during the demonstration. Two questions often come up with our online events. Can I get a copy of the slides and a link to the recording? The answer to both questions is yes. We definitely will be emailing you with information on how to access both the slides and the recording following today's event. So you can look for that probably sometime tomorrow. Without further delay, I'd like to introduce today's speakers, Hanny Shinar, General Manager, and Don Ford, Director, Oracle EPM at Proficient. Hanny is the General Manager of our Oracle EPM practice, and he is responsible for sales, strategy, and project delivery. With nearly 20 years of consulting experience in EPM, ERP, and BI, he has helped countless clients throughout a myriad of industries implement financial solutions to drive value with their technology investments. Don is a director in Proficient's EPM practice. He is an accomplished Hyperion applications consultant with more than 18 years of experience in information technology consulting. He has extensive experience with business process analysis, business process reengineering, and project program management. He has led or participated in multiple full life cycle implementations and upgrades. Right now, I'm going to hand it over to Hanny, and he's going to run through today's agenda at this time. So Hanny, take it away.
Thank you, Susan. So from an agenda perspective, we're going to be doing just a brief kind of overview about who Proficient is and what our capabilities are around our Oracle practice. We're going to spend some time on what the EPM cloud practice is comprised of in terms of solution sets and things like that. We're going to go in, if you look at our tagline, it's defined, discussed, and demonstrated. So we'll go through each of those areas where we talk about what is strategic modeling, how you can leverage some use cases to benefit from there, and then go into the detailed demonstration with Q&A and next steps after that. So Proficient, just at a high level, we're a global digital consultancy transforming how world's biggest brands connect with customers and grow their business. Just taking a look at this map here, as you can see, we have various office locations across North America. We also have offshore facilities in India, China, Europe, and various locations throughout Latin America. At a glance, these are some of the fast facts that we kind of lay out about Proficient. Just at a glance, we're publicly traded on the NASDAQ. You can go, we 2019 had roughly $565 million in revenue, founded in 97. We're at about 4,500 colleagues. The one fact that I like to call out here is our repeat business rate, that 90% success rate. I like to share it because it really speaks to our commitment to our customer success. We also, you'll see here down at the bottom, we have a variety of strategic partnerships with each of the major technology vendors. Oracle being one of those, and with Oracle we've achieved Cloud Select status as that Oracle partner. So when you think about our Oracle practice, we're very diverse in our capabilities. We essentially align ourselves to four main pillars. We support ERP, and that's on-prem and cloud. We also supply chain. We do EPM, where that's the legacy Hyperion applications, as well as cloud EPM and analytics. You think about our team. We've got, our average team member is probably sitting at 10 to 15 years of experience. So we've got highly experienced consultants. We've done a ton of projects, 3,000 plus projects across a variety of industries. So you'll see here healthcare, manufacturing, energy, oil and gas, and so on. A couple things I want to point out here is we've been recognized by both Gartner and Forrester as Oracle Apps Implementation service providers. And so you can go pull those reports, and it has a big write-up on about Perficient's Oracle capabilities. And then from a training perspective, we are an Oracle training provider where we host training classes, virtual and in-person events at our facilities. So we're going to take a slightly deeper dive into our EPM practice. And again, like we talked about on the Oracle, I think Dawn and myself are both part of this practice. We've been with Perficient going on 13 plus, working on our 14th year now. So a lot of deep expertise, right? And so talking about 10, 15 years of expertise, we focus on a lot of areas in the EPM product set. That's everything from a financial process optimization, where we're doing a deep dive on process reengineering and helping align some of those processes to best practices and to standard functionality, driving standardization across kind of Oracle Cloud functionality. On top of that, we've focused heavily on budgeting, forecasting, closing consolidations, and so on, as well as financial reporting. So that's a quick snippet of who we are as Perficient from an Oracle practice standpoint and our EPM practice. So going into strategic modeling defined. And so strategic modeling has traditionally been used as a long-term modeling solution. As you see in the diagram, you have a long-range planning consisting of many of the corporate M&A activities as well as treasury initiatives. All those typically pertain to long-range planning, and that's very balance sheet focused, right? There are a lot of capabilities in the income statement, but the value comes in on the balance sheet where there are not a lot of solutions that support this. Most of our customers are typically doing this in Excel. So it's a solution that's very unique in the marketplace and allows you to do long-range planning, but also gives you the capabilities to tie that back to a bottoms-up plan. So you can push targets from long range into bottoms-up for variance analysis. That's really one of the big benefits of the tool sets. It also takes into account uncertainty and risks, which are typically long-term oriented, right? And so it's built to handle those types of situations where you have a lot of scenarios you need to create and blend and model to be able to address those risks. If you look here in the bottom right, we're now seeing with COVID-19 that uncertainty and risk areas are being brought into the short term. So not necessarily long-term uncertainty. This is like real-time, right now uncertainty. And so when you're doing what we call that crisis modeling, you can't depend on your actuals, right? You can't look at year-over-year comparison. So you essentially have to depend on that rapid scenario modeling to meet your needs for the upcoming months. One of the additional benefits is it allows you to take your current operational plans that are essentially null and void, right? It's with the pandemic and the impact to revenues and expenses, it's essentially null and void, and then rapidly take that forecast or that annual plan and model various scenarios. And it could be a best case, a worst case, a pandemic case, and rapidly create those scenarios and then take those and blend them back in and do to do a kind of variance analysis. And so as you see, these focus areas are consistent whether you're doing long range or near term crisis modeling. It's the ability to do that rapid modeling on a scenario basis using drivers that are created. So some of those focus areas are liquidity and capital structures, and then how we kind of do that risk mitigation, right? And so we want to factor in how you handle that uncertainty, and that comes from the various scenario modeling capabilities. And and from one of the things that Oracle's kind of put out for this, they've extended an offer to all of their planning cloud customers, and that's not enterprise planning, it's the legacy PBCS customers. They're essentially giving these capabilities at no charge through April 30, 2021. So that's roughly, so what it allows you to do is go into your application, open up your application overview, convert the app to enterprise mode, and then with the ability to configure both strategic modeling as well as financials to tie operational and long-term and crisis modeling all together. They're giving the Groovy scripting as part of that. They don't allow the hybrid option, and there's no order processing. It's just you can go in and do it yourself and turn it on. Now, past April 30th, that's a conversation that you'd have to have with kind of your Oracle reps, but but it is an offer to help customers get over the hump on how they address challenges with the pandemic. And as part of that, we've got links here to an FAQ, and we've talked about we've written a blog that talks about that offer. And
All
with
right,
that, I'm going
great.
to turn it over to Don Ford.
Yeah, no, great. Hey, thanks so much, Hanny. All right. So now let's take a closer look at the problem. So Hanny did a great job of kind of really explaining to everyone what strategic modeling is all about. Now we're actually going to kind of get into the discussion and eventually the demonstration. So when you think about, as he mentioned, like volatility, uncertainty, I mean, that is nothing new, even though 2020 has really kind of been a huge curveball for everybody, both in our personal lives and in business. um, the ability for organizations to be prepared and responsible and quickly respond to market conditions has always been there. And I think that's probably why a lot of you may have Excel be kind of the foundation for your high level strategic plans. Well, one of the things that we wanted to share, especially on this call, is the fact that strategic modeling allows you to kind of go beyond those standard Excel capabilities, which we're going to talk about in just a moment, and allow you to respond in a very agile manner using some really nifty tools that are built into the product. So when you think about strategic modeling, we can really kind of boil that whole process down into 5 simple steps. So those steps would be identifying your key factors or KPIs, which Annie talked about a few moments ago. It also allows you to kind of model your organization, in terms of you may have business unit A, business unit B, they roll up to business unit C. Basically, what does your organization look like from a hierarchical standpoint? You can then create business cases. Those business cases kind of form the foundation of the what if scenarios. Then it allows you to assess those strategic plans, layer in your actuals, and kind of compare how your actual company performance is progressing against the strategic plans that you've laid out. And then you can align those strategic plans with your operational plans. So when you think about those 5 steps, that's essentially what we're talking about in strategic modeling. So how do we solve it? Good question. So let's take a look at this graphic, and we'll use this as a setup for the demonstration we're going to get into here in a few moments. So when you think about step one, identifying those key factors, absolutely, that's going to then allow you to model out your organization. Again, you have the ability to kind of create this hierarchical structure, even if you're planning aspects of your organization that may not exist, i.e. you may have some M&A activity you also want to model out, what an acquisition could do in terms of adding to your business. That's absolutely a model you could create and align. But then once you have that structure created, then you can establish what we call a baseline business case. And that baseline business case is just basically, hey, here are my initial assumptions about what this particular organization or this business unit is ultimately going to do. And then you adjust and manipulate those drivers to develop that baseline business case. And then from that baseline, you're able to then layer on the additional, this is where the what if comes in, a downside business case, an upside business case. And the difference between your baseline and your downside and your upside is this the drivers, is the mechanism that you use to get to that financial outcome would be essentially different. And you have the ability to document those, capture those, and of course, obviously report on those. So the beauty about strategic modeling is you can create as many business cases as you desire, and then of course compare that back to your baseline. And then after those business cases have been developed, then that allows you to assess. And we talked about assess in terms of, hey, how am I comparing against my baseline business case? If I set an upside business case, what is it going to take for me to reach that? What do I have to do in sales? What do I have to do in reducing my cost of sales, et cetera? What do I have to do in terms of maybe paying down certain debt items, you know what I mean, to make my balance sheet stronger, to improving my liquidity? So all of those quote unquote assessment features are actually built into the tool. And then the beauty that strategic modeling offers, outside of what maybe some of the other marketplace products may be able to facilitate, is the ability to link those strategic plans, those business cases that you just developed with your operational plan. And nearly everybody does some form of annual budget or a forecast or both or some combination thereof. And then how do I then say, okay, if I have these strategic plans and I have cost center owners, department owners who are developing my operational plans, I want to use that to set targets for my operational folks so they have some guidance in terms of what I expect their business unit to contribute to the organization's bottom line. So it's that linkage that really kind of sets the Oracle product apart. And then once those development of the operational plans are complete, then you have the ability to do variance analysis between your bottom up, which is your operational, against your targets or your strategic plans, which is top down. And all of that variance analysis is really facilitated in the Oracle planning and budgeting product. And then, of course, on top of that, you have the ability to report. So having all this data, of course, would be meaningless if I can't report on it. And there are a number of sophisticated tools in terms of SmartView, which is an Excel-based product, which we're going to show you, as well as dashboards in the planning and budgeting product. Those all kind of facilitate the reporting. And then that cycle has the ability to repeat itself. So when you think about what Hanny just mentioned, it's just not about long-range planning, but it can also be done over very short cycles as well. So you can have this cycle turn over and repeat as rapidly as you desire, monthly, quarterly. It doesn't have to be on a year-to-year basis. All right. So with that being said, let's jump into the product and we'll go into the demonstration portion. All right. So this is Planning and Budgeting Cloud Service. For people who are familiar with Oracle Cloud or familiar with planning and budgeting, this is probably a screen that you're very used to seeing. As you can imagine, right, with operational plans, everything from revenue planning, expense planning, capital and workforce, all of that kind of comprises my operational activity, normally being done at a very finite, I would say cost center, departmental type level. When you think about strategic plans, that's the piece that we're going to focus on this afternoon, because normally that's done, typically in the hands of kind of a smaller number of people, typically in the office of the CFO, really kind of highlighting or kind of evaluating what outcomes may look like out into the future. And normally the strategic plans are at a little bit more high level than our quote unquote operational plan. So if I click on strategic modeling, one of the first views that I ultimately want to be able to show you, and I'll kind of call your attention to here, is the point of view. So the first point of view here is that we're working in a scenario called plan. It's for one of my sales US entities. And as you can see here, I just have a few, common income statement items in terms of revenue and cost of sales kind of culminating in the gross profit. I can see a working column here. So that represents the operational plans that we're just talking about. I can see a target that represents the strategic plans. And then now I see the variance analysis. So again, this kind of ties back to that flow that we just discussed. And then I see multiple year targets going out to the right. Those represent my strategic plans running out to 2023. Now, I talked about a few moments ago how you can link the two together, linking the strategic with the operational. How do I do that? So when I say I want to link those plans, the first thing that I have an opportunity to do is when I say targets, right, to bottom up, these scenarios that you see here represent scenarios in strategic modeling. So a few moments ago, we talked about baseline, downside, upside, or any other scenario. I have the ability to run rules to bring those strategic plans, to merge those up with my operational plan. So if I say, hey, I want my baseline business scenario to be compared against my operational plan, it's as simple as just me running that rule and having that baseline value be represented as the target values that you see there. If I then have a lot of cost center departmental owners, right, working on the operational plan, and that's represented by this quote unquote working column there, that's easy as well. I just run the sync with my long range plan, and that pulls over my operational plan into the strategic plan. And I can create any number of variance analysis for the full income statement, for the balance sheet, any financial construct that I desire using these out-of-the-box tools. So let's now take a little bit deeper dive into how we develop and what this strategic modeling product actually looks like. So again, let's call attention to just this point of view aspect first. So the first thing I want to call your attention to is the scenario. So if I were to drop this down, you can see I have a baseline, I have forecast, I have some type of product expansion potentially, I have a premium pricing strategy. all of these scenarios represent different financial outcomes. So let's say right now, if I go to my baseline and I hit the go arrow, this will basically show me what I'm expected to do from 2018 through 2023. The dark cells, the black cells that you see here are what we call our actuals. So those are essentially just kind of, non-hyperlinked, if you will, cells. So that's a visual indicator to you that for this model that I've defined, I have 2 years of actuals and 4 years of forward-looking forecasts. Okay. Now, to go even further, I have the ability in strategic modeling to group accounts together. So one of the things that we often get asked about strategic modeling is, hey, how do I take my chart of account structure and kind of align it with strategic modeling? That's obviously very easy to do. You're able to um, use the out-of-the-box strategic modeling account structure because that's what facilitates the rapid deployment of models. So the income statement is designed to be aligned with the balance sheet. The income statement and balance sheet are then aligned to work with the cash flow. And there's a lot of logic behind the scenes that keeps those three financial structures always aligned, always balancing. So what we often are asked to do is help educate our clients on how those three work together, and then we leverage the out-of-the-box account structure in strategic modeling. So if you think about, again, this account groups, I have everything here from my income statement, as you can see there. I can group my revenue items together, my operating accounts together, interest and taxes, no big deal there. I can group all my balance sheet items together if I just want to see my current assets, if I want to see other aspects of my balance sheet, I can see all of those figures. If I didn't even wanted to go down to my cash flow, those values can be grouped together as well. So strategic modeling, the first thing to be aware of is that it has its own chart of account structure directly out of the box, and we leverage that for our scenario modeling. The next key feature that I want to be able to kind of show you and kind of walk you through is what we call the account forecast, right? So I'm going to hit calculate here, and I'll kind of show you just a little bit about the account forecast. So in order to be able to project forward for those out years, one of the things that strategic modeling offers is various mechanisms or abilities to basically do a forward-looking projection. The first one, and I'll click on, service revenues here, and again, I'll kind of point out the point of view. So in this, for forecasting my service revenues, I can see that it's going to be forecasted as a percent of growth rate, and it's basically going to be a growth rate on product sales. You see the account there, product sales. So essentially what I have the ability to do here in strategic modeling is define multiple mechanisms, multiple ways of forecasting a given account. So I could do it as actual value, I could do it as a growth rate, I could do it as a percent of another account, lots of flexibility and variability there. And then even if you look at an account like product sales, if you notice that the type there is free form, what does that mean? Well, let's take a quick look. So when we say free form, notice here it's actually formula based. So I can see in the formula that my product sales is the V300 times V305. Now, a lot of people are like, man, we don't know exactly what 300 and 305 is. Again, because we're leveraging the structure that exists in strategic modeling, I can see that 300 is my volume, and I can see 305 is my product price. So my sales, very simple, is going to be based on unit volumes times product price. And that's what I'm going to use this as kind of my baseline. So account forecast allows me to use multiple methods to actually achieve a forecasted outcome. And I could use arithmetic operators, as you saw there, right? The 300 times the 305. I could also use functions, right? Very similar to what you would have in Excel for those people who answered the poll question earlier who used to kind of modeling things out in Excel. There are a number of functions built into the product as well that can be used to help forecast forward any of the accounts that we have in our strategic plans. All right. So that's one of the first key features we want to really talk about. The second key feature that we want to highlight is something called Audit Trail. So if I go to Actions and I go to Audit Trail, let's take a closer look at this view. And I'm going to move this over just a little bit. So notice for 2023, right, my sales is projected to be 750 million. Okay, great. Where did that value come from? It tells me very clearly in the audit trail that, hey, we took the unit volume, right, and multiplied it by the product price. And notice these are hyperlinked values. These are hyperlinked because when I click on those, strategic modeling can traverse back up to the 1908 and even give me an audit trail on the subcomponent of my sales. So now when I click that value, I can see the 1908 there, and Audit Trail even tells me how did that value arrive. So Audit Trail gives you the ability to trace back any value that you forecasted or model. Think about it as, a very sophisticated tracing of precedents or formulas in Excel. But the beauty of it is hyperlinked and it's all very, very clearly laid out. So in this case, you can see that the 1901 there was based on me taking an input value of my growth rate, right, multiplied by the volume from the previous year. How do I know that? Because it's telling me 2022 unit volume times the growth rate is how I arrived at my unit volume for 2023. And I can do that for any year, as you see here, and I can do that for any scenario. Remember the scenarios we talked about earlier. So Audit Trail is another very powerful feature in strategic modeling. All right. The next item that I really want to call your attention to is something called Goal Seek. And again, this is probably another feature that a lot of you, may already be very familiar with in terms of, let's say I want to kind of model out the ability to get to, as you see right here, I'm projected to do $800 million, 801 in 23 for my quote unquote total sales number. But let's say if I wanted to, adjust, that value. If I wanted to say, well, yeah, that's really great, but well, let's say, what if I wanted to take my unit volume, right? And so I want to adjust it by unit volume, and I want to start it in, let's say I give it a particular period, right? So I want to start it in, let's say, 2020 or 2021. So I'll pick that period. Sorry, my forecast 2020, and I'll say the end period. Yes, it's going to be 2023. All right, great. And then now, if I just scroll down, I can adjust by the same amount. And then now I can say, hey, I want Goal Seek to basically establish a new goal. And I'll just make it something simple like 803. So just a slight uptick. And then I tell it seek. So now I can use Goal Seek in strategic modeling based on the parameters that I've set, the parameter of using units to be adjusted. You can tell that it's okay, if you want to achieve 803, here's the new unit projection you'll basically need to accept in order for you to hit your goal of $803 million of sales in the year 2023. And the beauty is, unlike Excel, it's color coding the impact of accepting, that particular goal. So if you notice this, when I made that decision to do a goal seek adjustment, there I can see in yellow, yes, the units changed, but then that also in fact impacted my product sales. And even if I were to scroll down my income statement, right, my discounting returns, all the other things that are hanging off of product sales are reflected in this particular change. And if I were to save it, and then recalculate that scenario, now I've simply accepted that particular adjustment to my forecast. All right, great, excellent. So just a little bit about the goal seek functionality. Another really nifty feature in strategic modeling is what we call simulations, and I'm going to explain a little bit about this capability as well. So I'll let this come up. All right. So there may be some of you on the phone who are at least familiar with the old Hyperion strategic uh, finance product. Strategic modeling basically is leaning, or basically is a continuation, of that product. Obviously, of course, deployed in the cloud, but a lot of the concepts, a lot of the rhythm, a lot of the capabilities is now built into this cloud product. If you were familiar back then with a product like Monte Carlo simulations, that is essentially what we're doing here. A simulation allows me to, for a given account, for a given time period, basically test or run a series of calculations based on some assumptions that I'm going to make to basically help me determine how viable, how likely is it that I could hit 803 million in sales in the year 2023 based on some assumptions that I'm going to set. So How do I do that? So if I go to settings, I can, determine the number of trials. I can also say, hey, I want to use my um, sales figure for 2023 is to kind of be the first assumption, right? So I'll say simulation object. Yep, so that's all looking good. And then I may also scroll up just a little bit and I will delete these so we can kind of start with the clean slate and you can get an idea of the simulation. So I'll set this as my forecast. So that'll be the first object. And then now I'm going to select the unit volume is the other item that I want to flex. So I'll let this load here just for a second. And I'll set that as an assumption by clicking this Set Assumption button. And then now it'll tell me, hey, what distribution do you ultimately want to use? So in this example, I'm going to say, hey, give me uniform distribution. And at this point, now I can set bookends for the range for the upcoming trials that it's going to run for my unit. So I can say, hey, over the next, 3 to 4 years or 5 years, I want to do a range from 4.6 to 5.6, and I'll just accept that. Same thing for the product price. I want to set an assumption based on my product price. So I'll let the simulation object load. I'll click set assumption and I'll pick the distribution, or the assumption is going to based on kind of a uniform distribution. And then I'll set, yeah, the range, I may want to go up just a little bit higher, up to 45. So that product price range is going to flex between 35 and 45. So now with those assumptions set, and you can see those are still highlighted there in green. And now with my sales is kind of being the target, I can now kind of review the simulation objects just to kind of make sure, yep, I got unit volume, I got product price, I got sales. Now I can run this simulation, which means it's going to basically test using statistical algorithms the likelihood of me achieving that sales target. That's what the trials do. It basically pushes that over through a series of like 400 trials or 400 cases, and then it's basically giving me a prediction or a projection to say, hey, you have a 59% likelihood of hitting the $803 million in sales that you're projecting. What is that based on? It's based on the assumptions that I've set, the range that I set, the distribution means that I set, and then of course the actual Monte Carlo simulation algorithm that's running in the background. Okay, and then it also even gives me additional information that I consider in terms of worst case or best case. So it's saying, hey, the worst you could do is 738, and hey, if things really break right, you could do 904. There's also the ability in simulations to set a target value. So I know my target right now, because I did the goal seek earlier, is 803. Well, gosh, my boss may ask me to, hey man, see if we can get it a little bit higher. I can use simulations to do that as well. So let's say if I say business unit, target, which is kind of an additional target over and above what I have, and I want to know, hey, how likely would it be that I could hit 810? I could hit the simulation run again based on, again, the assumptions that I've already defined, and it's saying, hey, you have a 57% chance of even hitting 810. So you have the ability straight out of the box to leverage simulations to help guide some of the bottom up, organizational decisions you've made. So then that's simulations. So now with those key features kind of, demonstrated to all of you, the next area that I really like to kind of show you is, I do want to make one point. So just like we kind of use that simple example that everybody can kind of get their head around in terms of the income statement, unit volume times product price equals sales. One of the things that Henny touched on a few moments ago is that it's not just related, or not just, I would say, tied, if you will, to the income statement. We can do these type of simulations. We could do goal seek against the balance sheet as well. So I just use this as a simple example, but keep in mind that you could do these type of formulas. You could do this type of account forecast and even goal seek against any of the three big financial statements: the income statement, the balance sheet, and the cash flow. Another key feature that strategic modeling offers is the fact that into the product, you have ratios built directly into the product. Again, that's why you're using really those three as a set, because into the product, we don't have to write any custom calculations for this. You're able to see gross margin percentage, return on sales, there's leverage ratios in terms of debt to equity, there's equity ratios, there's activity ratios in terms of on the balance sheet, days in receivables, days in payables. All of these KPIs or financial ratios are built into the strategic modeling product. All right, so let's then go to another key aspect of the strategic modeling product called model consolidations. So I'm going to go to US operations. And as you can see here, US operations is comprised of what? Two business units, Sales US and Finance US. Sales US and Finance US both roll up to US operations. When I look at this particular business scenario, right, there's all the business scenarios that we just talked about, baseline, downside, upside, etc. There's also the ability to take into consideration for your consolidations any minority ownership that you may have. So let's say for a particular business unit, you only own 50%. You can put 50% here and it will consolidate just 50% for sales US and 100% for finance if desired. You also can use the out-of-the-box consolidation methods, which allow you to say for minority interest, it kind of defines that for any organization where you may own anything between, call it 99 and 50%. Equity, where you may own, let's say, from 20 to 50%, and then there's this cost method, which is 20% and below. So those consolidation methods can also be leveraged again to impact your high level or top level consolidations for any top line model, whether it's US operations or even parents that may exist above that. So in this case, right, the beauty about strategic modeling is it tells you what's been changed. So in this case, I have sales US and I have finance US rolling up to operations. Well, it tells me right here that sales US, as a result of some of the changes we just made, has changed. So I need to run a consolidation to roll those numbers up. So now I kick off a simple job, it runs the consolidation, it rolls the numbers up completely. And now when I go into operations US, it'll be the net effect of finance US and sales US being combined together. So that's why, again, going back to the PowerPoint that we started out earlier, the ability to easily and simply model out your business, create models for any aspect of your business, and then put those in a hierarchy, and then consolidate and roll those financials up in very easy to use, very fast way is another key advantage of the strategic modeling product. Let's say I have a tree that's a little bit more detailed than this, and I wanted to exclude a certain branch. I can absolutely exclude from my parent business case if I desire. I can remove things from model, so it's very, very flexible in terms of what I'm able to do. All right, great. So another key thing that I just wanted to be able to share with all of you, and again, thanks for joining our webinar, is that, let's say you say, well, that's great. How easy is it to create my own model? Man, I'm glad you asked. It's really easy in strategic modeling to create your own model, and that's done here by an option we call the scenario manager. The scenario manager allows me to take any of the different cases that I may have, whether it's the baseline or whether it's expansion or my downside and upside. As you can see here, I have a pandemic business case. And if I want to use that, right, as a baseline for a new scenario, that's really easily done. So here, I have a pandemic case, which is much lower, if you will, than what I'd forecasted even from my downside business case. And if I want to use the scenario manager to basically create a new scenario, that's quite easy. So let's say this is a copy of pandemic. So I would say this is very best. Let's see, pandemic 2 is an example. Just give it a simple name, and then this is the remaining 2020 outlook is a good example. Just give it a brief description, and then now the key part here is I can say that I want to use this scenario and I can have it, just be a standalone, or I can inherit the values from another model that I've already created. So in this example, I can say, hey, inherit it from downside, right? It kind of already knew that, or I can inherit it from any of the other scenarios that exist in the system, right? So in this case, I'll change it up a little bit. I'll say, yeah, inherit it from my baseline business scenario. And then now I have the ability to say, hey, what accounts do you actually want to use? And I could put anything again from the income statement or the balance sheet or the cash flow. And I can have my new planners that I would have plan out what I'm calling pandemic 2. I can have them plan out their own new scenario against the scenario that I've just created. So now pandemic 2 is created here. And if I go to the scenario manager, there's pandemic 2 and those same features that we talked about just before, where I can do account forecast, I can do goal seek, I can run simulations, I could plan my income statement, I could plan my balance sheet. Any of those factors are still available to me for planning, for modeling. And then even when I go to consolidations, just like we saw, we can consolidate the base business case or any of those other cases. Pandemic 2 would also be available there for me for consolidation. All right, great. So really easy to create new scenarios because again, that's the power of the tool. So one of the things that I also want to focus on during the webinar was to show you that, I know a lot of people, especially in finance, love Excel. So I've obviously been doing everything kind of in our, web browser, motif, but that doesn't mean that the power of strategic modeling is just limited to the browser. So we have an example, right? And this is what we would call Smart View. And for a lot of people who may or may not be familiar with the Oracle product, Smart View is basically a plugin for Excel, which allows you to get into any of the cloud-based applications through Excel. So in this case, I've installed a plugin specifically for strategic modeling, which allows me to use a lot of the same features that we saw just before, even in Excel. Pardon me. So we talked about account forecast. I could do that through Excel. We talked about goal seek. I could do that through Excel. So any of those features that I talked about, Audit Trail is another one that here's too is also capable through Excel, can be driven. But I also want to kind of take a few minutes just to impress, that when we think about what modeling is, it doesn't just have to be limited to kind of the first view that I showed you a few moments ago. This is another model for basically our insight business unit. If we look over here to the right, notice that Vision Consolidated has, multiple areas underneath it. There's acquisition that we may be targeting. That's a part of our consolidation view. There's computers, which is, basically comprised of facility upgrade, insight, plan expansion. These are all just various models. In insight business unit, I actually have various products, right? So there's notebooks and netbooks. And then there's, as you can see in this, return on invested capital tab, that the return on invested capital for our notebooks is sitting at, 22.9, excuse me. Well, that's great, but what if I want to use goal seek, right, to actually get that up to, a higher number? This is kind of an example of how everything that I did just a few moments ago in the browser, you can ultimately do in Excel. And I just want to take just a few minutes to kind of show that to you. So let's say if I, click on units, right? So I'm going to search for an account and I say units, right? So again, for the value that I'm trying to seek or basically change is the return on invested capital for my notebooks. So I'm going to basically change or set I'm sorry, I actually did it in a little bit of reverse. So what I want to change is the return on invested capital. There we go. Return on invested capital for my notebooks. Exactly. And in 2021, as you can see here, we're already scheduled to do 22.9. So I just want to round that off just to 23. And I'm going to change it by changing, any of the available drivers that would affect my return on invested capital. So in this case, I'm going to say, basically units sold, right, for the notebook. So in this case, right, I'm going to say, yep, from July 17 through 2021, and now I'm going to hit seek, and I'm going to have goal seek just run the calculation to be able to project out for me what it would take to hit a 23% number on return on invested capital by flexing or by adjusting the unit sold. So very similar to what we just saw in Excel, in the browser, we're also able to do in Excel. Why? Because strategic modeling has a plugin for Excel, and all those same features, now just in a different, motif or view, I'm able to perform those exact same functions. Okay? All right, great. And there's just one other Excel example that I just want to kind of share with you guys. So very similar to what we just looked at in in our insight business unit, if I go up to the very top, let's say vision consolidated, and this is another very, common use case, if you will, and it'll kind of give me an opportunity to talk a little bit about another feature in strategic modeling called funding. Let's say, for example, and this is just kind of a simple example, we have certain earnings per shares. We're a publicly traded company. We have certain EPS targets that we have to hit. So obviously there's a management view, right, of those EPS targets. So for 2018, 2019, 2020, as you can see, we're expecting our earnings per share number to go from 479 to 540 to 569 up to 651. Great. But we also get information from the analysts from the street, and they too have a projection on what we should do year over year. Well, for the first year, as you can see, in terms of management versus analysts, just kind of taking our view versus their view, hey, we're right on track for 2018. But when I look at the out years, 19, 20, and 21, we're kind of trailing behind. Well, actually, that's not an ideal situation. We would like to be, on par, if not a little bit better. So there's a funding option in strategic modeling, which kind of allows you, again, to kind of help. And this is really, again, facilitated by the fact that income statement, balance sheet, and cash flow all designed to work together. So what we're able to do is say, well, let's say if we have a surplus of cash, based on whatever we've projected for 19, 20, and 21, and we want to do let's say, kind of a stock buyback. You know what I mean? So we want to say, hey, take that excess cash, the surplus that we may have, and then we want to basically, sorry, we want to, I'll say common shares issue. There we go. There we go. Short-term debt. I'll just kind of rearrange this back the way I had it. There we go. I want to issue basically a stock buyback. So as the years move forward, we'll buy back some stock and we'll use that to kind of lift our EPS. And I'm doing that by just manipulating, if you will, how I'm applying my surplus cash in my out models. And as you can see, there are a number of items here that I have as levers that I could affect. And there's also, something on the other side in terms of how do I fund cash deficits. So if I just, as a simple example, I check this, right? I say, okay, and now I hit the calculate icon. So now strategic modeling is going to say, okay, you made a change in your funding assumptions. Now I'm going to kind of recalculate, what that would do to your EPS. So I'll give it a second here just to kind of refresh, and then we'll see if that affects our EPS numbers. Just give it a second. There we go. So now, again, 2018, right? We're still in lockstep in terms of our, what the analyst consensus was. But now for 2019, where we're behind, we're a few cents ahead. And even 2020, we're even further ahead. And by 2021, we're almost $1 ahead of what, the analyst consensus is. So that can be used to really kind of change how strategic modeling applies deficits, if you have, in terms of a deficit of cash, or if you have excess cash, and how that then affects your forward-looking projections. So again, just a simple example, just for everybody to kind of get their head around, again, just demonstrating the features and functionalities available to all of you in strategic modeling. All right, so now let's go back to the web, or the browser-based product. So again, so let's say we've kind of completed, if you will, our strategic plans. We kind of go back to our operational plans, and we have department owners, cost center owners. They're all kind of working through their bottom-up plans. One of the other things that we would definitely want to impress upon all of you today is that we have the ability to push or move strategic plans out of the strategic planning, even into the operational plans. So that's facilitated by the fact that I can take all of the upside, the baseline, the downside, the pandemic business case, whatever cases I desire, move those into planning and budgeting cloud, enterprise planning and budgeting cloud, and then produce dashboards and graphs. Like, for instance, these are simple bar charts. You know what I mean? I could do line graphs. I could even do data grids where I can compare my base, which is my target, against my downside, and then do variance analysis on those. So I have a lot of power from a reporting standpoint by combining my strategic planning and the ability to model out whatever scenario I want over whatever time level I want for whatever business unit I want. And then I then have the ability to move it into this product where my operational planning goes on, and keep those two aligned so that my operational team always has an eye or a vision to what's being set as targets for our overall performance. Okay. Well, that is kind of a conclusion of the demonstration. I hope everyone really kind of got at least a flavor to a certain degree some of the power and capabilities that exist in strategic modeling. And now we would like to open it up for questions. Susan, would you like to moderate our questions?
Hi, Don. Thank you very much. So as a reminder, we are now going to open up the call to questions that have come in via chat during today's event. So if you have any questions for Don and you haven't had a chance yet to go ahead and ask those questions via the question tab that you should see in your right-hand corner there, please go ahead and do so at this time. Looks like we have had a couple of questions that have come through, so I'll go ahead and ask those now if you, Don, if you got a minute.
Yes, absolutely.
All right. First question here is from Mohan. Mohan says, if I have to use the strategic modeling account structure and not my own, how do I gain an understanding of how the income statement, balance statement, and cash flow are laid out?
Yeah, good question. So essentially, what Oracle provides is a documentation, basically an administrator's guide that really lays out all of the things, that I've kind of at least just, barely touched on today in terms of what the full income statement from an account structure is comprised of. Same thing for the balance sheet, and the same thing for the cash flow. Even those liquidity ratios, debt to earning ratios, those KPIs that I showed in one of the screens, even those values are actually articulated in the admin guide. So there's no ambiguity in terms of how certain elements of the income statement affect your balance sheet and balance sheet affects your cash flow and vice versa, and how those ratios are calculated. So that is actually Oracle documentation that is actually provided by them.
Thank you, Don. We've got another question here. This one comes from Joe. Joe says, how do I incorporate custom client-specific accounts into strategic modeling?
Yeah, no, good question. So with regard to that question, when you think about the return on invested capital example that you saw there, I may have clicked on it a little bit fast, but there does exist something in strategic modeling called memo accounts. Memo accounts are basically, when you think about the kind of the standard structure that I just alluded to a few moments ago, memo accounts are basically user-defined accounts that you could use for whatever purpose you desire. So let's say you look at the income statement, the balance sheet, and the cash flow, and you say, well, gosh, or even our KPIs, hey, there's a account that we use or a metric that we use that really isn't covered by your out of the box. You're able to create memo accounts and then define a forecast via the account forecast functionality that I demonstrated a few moments ago, and really define what that memo account is going to mean for your specific model. So those memo accounts fill in those client specific gaps that are basically could be created by you leveraging a out of the box account structure.
Thank you, Don. We've got a question here from Audrey. Hopefully this one makes sense to you. She's asking, what are the differences between this tool and the planning one? So I don't know if she's referring to what that might mean. Hopefully you get that.
Yeah. No, I think I do get it. Yeah, good question, Audrey.
Okay.
So the difference between strategic planning, strategic modeling, and the core planning tool is a couple of things. One, when you think about strategic modeling, it's about modeling your organization at a very high level and then projecting forward over a period of time. Typically, when people use the other tool, which is what I call the operational planning tool, it is going to be based on not the out of the box account structure, but your, call it, trial balance structure, your cash flow structure. And it's going to be basically allowing you to put templates, web forms, and other planning artifacts in front of end users that really kind of speaks their language. And it is granular, and it is detailed, but what you're trading on the operational side, you make up for on the strategic side, because again, your outlook is not going to be, your outlook is going to be further out, 3, 5, 10 years out. And what you're sacrificing is the level of detail. Most people, when they do strategic planning for the income statement, they may plan 5, 10, 15 accounts, no more than that. Same thing with the balance sheet or the cash flow. On the operational side, it's going to be a lot more granular, a lot more detail. Hopefully that makes sense, Audrey.
Thank you, Don. We have one more question here, and it's going back to the offering that Oracle has presented for existing customers. It was the question about the timeline. Don, can you just remind us what the timeline was of this offer that's being
Yes.
extended?
Yeah, no, good question about the timeline. So right now, Oracle has an offer in place to allow PBCS customers, customers who weren't previously on Enterprise, as Annie mentioned, to convert to Enterprise free of charge through April of 2021. So between now and April of 2021, you won't be charged for using these extra features, which previously weren't available to PBCS customers. They were only available to enterprise customers. So that is, kind of a few more specifics about the offer and the timeline associated with it. It's basically a free use of strategic modeling, of financials, and Groovy through April of 2021.
Thank you, Don. So I think at this time, to make sure that we have a chance to get in our last slide that you wanted to present, as well as our final polling question, Don, I'm going to hand it back over to you and let you go ahead and
Yeah.
address that. Go for it.
Yeah, no, thank you. Yep. So, hey, thanks everyone for attending this afternoon. We really appreciate everyone's time. We realize sometimes in an hour webinar like this, we can't cover all the things that may be pertinent or all the questions that you may have of us. So what we would like to offer is a virtual lunch, right? We have to do that in this day and age, where Proficient still picks up the lunch, but we'll be happy to dive into any of the areas that we talked about today. It could be rapid scenario modeling, connected financial planning, which is, continually aligning our strategic plans to the operational plans, as we've touched on at several points during the demo. Continuous planning, how budget begets forecast and forecast begets budget, or even the implementation of, a rolling forecast. We're happy to cover any and all of these concepts with you.
So with that, Don, we can go ahead and close today's event. I want to thank everyone for participating. We really appreciate your time today. I hope you got a lot out of the demonstration. Don is absolutely one of our phenomenal presenters. And again, as I mentioned at the beginning of the presentation, Don is a director in our Oracle EPM practice. And also speaking on today's call was Hanny Schnarr, our general manager of our practice as well. So to both you, Don, and Hanny, thank you so much for presenting today. And to everyone that had asked questions, can I get a copy of the slides or can I see this demonstration again? We are recording this and we will absolutely make sure that everyone gets an opportunity to get that content and share that with others. So we hope to see you online in the future, and thank you for joining us today.